Episode of Foliko Earnings. Now, if you didn't catch our announcement last week, what we're doing is we have had a lot of requests to take our show, which has been broad based in general, and see if we can go out with special themes. So every episode, every time, you're going to be getting a specific pointed set of content. And today, that content is earnings. So, earnings, we're well past earnings season. There's not a lot of tickers to be talking through these days. Tyler, what do we have coming up for today?
Yeah, really bottom of the order here. I found some interesting stuff on Foliko and NIO. We'll talk briefly about GameStop just because it's such a fun stock. Whether you're long or shorted, it was names like that make markets interesting. And then we'll briefly touch on Kroger. We'll show you what Foliko can say about their pricing power, which is interesting in the context of an inflationary backdrop. So we'll go through those three. Again, really bottom of the order. There are a couple other names reporting, but we don't really have anything great to say, so we're going to say nothing on those for once.
Today's earnings episode is going to be very short, brief. We're going to talk through only the tickers that matter, get you on your way to be able to trade as well as you can. So let's take a look at, is it NIO that's first or GameStop?
Yeah, we'll start off with NIO. We'll start off with, the most actionable one, in my opinion. Ticker NIO, bearish earnings divergence.
Now, real quick, I want to double click into this. When we show a ticker at the bottom of the screen, we call this our lower third, what's covering our faces right now. That means that we are putting our name behind a trade. This is something that we're going to be putting in our own portfolios. Now, we are not financial advisors, so you need to know your own risk tolerances and invest wisely, right? But that is, and this is generally the format that we're going to be taking here, not investment advice. Like that. All right. So tell us about this NIO trade.
So we'll start here. So this is something we're going to make everybody really comfortable with, talking about the divergences between price and our metrics. Specifically, earnings power is the one I found to be most powerful, and here it is. I mean, what else is there to say, really? I mean, we fully expect price to chase earnings power lower after earnings. The at the money put option, which is not the one I will be using in all likelihood, but this is how we are going to track our performance. We are going to use the at the money option in the prevailing direction of our call and track it in that fashion because we're making a time-based price prediction. So the at the money is 17 and a half, costs about, I think I saw 77 cents mid. So, you'd have to get a nice push. That is some premium in there, but we don't really foresee there being any problem with that. So we're short NIO into its earnings this week.
Great. Okay. Definitely something I'm going to be throwing some action on, but let's go ahead and move on. Again, this is going to be a quick show today. Let's take a look at GameStop.
So this one is more just kind of to be informational because we know there's so many people who are interested in this. So we want to throw our hat in the ring and show you what our analysis says. So really, not great. Pretty much everything in the negative territory. We do note that it does look like there is some of these trying to put in a bottom, especially in what we call our core four, which are the ones that we think are a bit more important. But still not really all that great, especially as we go out to moving averages, 4 and 10 weeks. Not all that exciting. If I can just break it down to earnings power only, trending lower. So we definitely don't think this is one to buy, but the fascinating thing about this is this one's all driven by positioning. This is a battle of longs versus shorts and forget fundamentals. So we're not touching this one. We just wanted to kind of let you know where Foliko was at and show you kind of how it was thinking about it. But yeah, I mean, not a lot of good things to report, unfortunately.
In a world where you can buy a video game from your living room and hitting the download button, Xbox Game Pass means that you have the Netflix of games and you can just take whatever you want. And they're acquiring every gaming company in the world. So that's all going to be thrown on Game Pass eventually. In that world, does anyone think that GameStop is going to be releasing killer earnings? I mean, really, the only shot this has of going explosively good stock price growth is if the meme stock thing charges forward again, which is why every major news story you're going to see about hopeful bulls saying "Yay GameStop" is going to be about Ryan Cohen leading the meme rally.
Yeah,
But
and
that's
that went real well with Bed Bath and Beyond. So
yeah, way to go.
right. So yes, that's the only, to me, that would be the best bull case, is some sort of acquisition, honestly. If another company was like, okay, we'll take GameStop and we'll use it to be our official distributor of our games or something like that. But yeah, not one for me. You
For
know,
what? I mean, it'd have to be a real estate play. I don't even know what you would strip out of there for IP.
that's interesting. Yeah. I mean, they are ubiquitous in strip malls. So, maybe that's a bad thing. Maybe that's a good thing.
It's an easy click button for Amazon to get their fresh stores out, but that's the only acquisition thing I could.
Right.
Anyway.
And once you're oh, Amazon could buy them, you're kind of at the end anyhow. So but the third one is similarly a consumer name. And I thought this was important because a large percentage of what's going on in macro and in markets is driven by your inflationary view. So this is one way you can kind of look for some an alternative view on inflation here with Kroger's earnings power, which is actually finally starting to come off a little bit, which is interesting. This might suggest that we are kind of closer to a bottom in risk than some expect. Our analysis has said September. We feel a little, that's going to be a little sweaty, honestly, with the recent drawdown and the strength with which we gave back that bear market rally. But that would kind of be consistent with what?
That was a Powell slap to the face of everybody. Yeah. Holy smokes!
That was something, and the Fed watcher in me thought that one was really interesting. We'll talk about this later, but I think
that this to your point on Kroger talking about inflation, I think this really speaks to where grain prices are. Grain, petrol, and housing. Those are the three drivers of this inflationary market. In our upcoming episode for Foliko Live, don't miss it. It's coming out in just a little bit here. We're going to be talking about those three things because I think there's an interesting story on all three fronts happening at the same time. So let's jump to it.
But anyhow, no trades to do in Kroger, but we do note earnings power is coming off, which could be, a first step towards inflation moderating somewhat. I mean, by moderating, I mean starting to see negative month-over-month prints, which is really what you need to see to get the Fed to slow down, in my opinion.
Now look at this converse relationship between earnings power and Kroger's price. Since April, they've really been diving down. You could say they flattened in July, but their earnings power has actually been going up at the same time the company's been going down. What do you think is precipitating that, Tyler? Why would that relationship be happening?
I mean, I think that's just a function of inflation. I mean, even if your earnings power on a pure basis is going up, that doesn't mean that there are other things diluting that are also going up. Your input costs are going up as your earnings power is going up potentially. Because your margins are improving, that doesn't necessarily mean that you're not getting pickpocketed somewhere else. So that would be something interesting to watch, and that's why we bring it up, because this has nothing to do with Kroger per se. It's more about our view on the price of groceries and the price of foodstuffs.
Interesting. I think that their competition line has been interesting as well. If I'm looking at that, their competition line has been hovering negative flat line from May to July. It has improved from July through September, but they seem to be lining up with that competition, which would support that they're struggling against some headwinds, but doing fairly well against all their other competitors.
Yes, and that makes sense. They were one of the first ones to make the switch in COVID to like the COVID grocery store. They were best prepped. Their supply chains apparently were already being run at a taxed level or being practiced at a taxed level. So that'll be interesting, and just a grocery store technical. But I think we're gonna wrap here. We'll be back in a little bit with Foliko Live. But these are really our favorite things to take away from earnings that are reporting this week. Any final thoughts?
No, I think we're good to go. We'll see you soon for Foliko Live. Hopefully that gives you at least one good trade to think about for earnings, and we'll talk soon. Bye all.